In global trade, some ideas are so bold they seem impossible, like carving a new canal through Central America to rival the Panama Canal. Over a century ago, the Panama Canal changed the world. Now China is backing a $50 billion project to build an even larger canal. This new waterway would cut through Nicaragua, creating a direct competitor to Panama and reshaping global shipping. The scale is staggering, a channel longer, wider, and deeper than Panama's, able to handle the world's largest ships. Driven by a Hong Kong-based company with Beijing's backing, this isn't just business. It's a strategic move to secure China's trade routes for generations. For China, the price tag is high, but the potential payoff is global influence. The idea of a second canal isn't new, but China's financial muscle and political will make this attempt different. The project promises jobs and development for Nicaragua, but also raises tough questions about debt, the environment, and sovereignty. If completed, the canal could lower shipping costs, create new economic opportunities, and shift the balance of power in the Americas. For over a century, Panama has held a near monopoly on this vital trade route. Now it faces a formidable challenger. The story of this canal is about a changing world, where new powers rise and old certainties are upended. Even before construction begins, the world is already feeling the tremors. The stakes are enormous, and the outcome could redefine global trade. China's $50 billion gamble is more than a project. It's a statement about the future. China's motivation is simple: control. As the world's largest exporter, China relies heavily on the Panama Canal, a vulnerability it wants to fix. Political tensions or rising fees could threaten China's trade. By building a second canal, China gains an alternative route it helps control. The economic logic is clear. Modern superships are too big for Panama, forcing them onto longer, costlier routes. A new, deeper canal would let these giants pass, making Chinese exports cheaper and more competitive. It's a long-term investment to keep China at the center of global manufacturing. But the canal is also a symbol. For decades, the U.S. dominated Latin America and built the Panama Canal. Now China is making its mark in America's backyard. This project signals China's arrival as a global power, not just a regional one. The canal also secures China's access to vital resources, oil and minerals from Latin America, by making transport faster and more reliable. It tightens China's economic ties with resource-rich nations, fueling its industries and growth. By investing in this infrastructure, China strengthens both its export power and its supply chains. The canal is a two-way street, shipping out goods, bringing in resources. It's about economic security, global influence, and a new era of competition. For China, the canal is a strategic asset, one that could shape trade for decades. This is more than shipping, it's about rewriting the rules of global commerce. The chosen site is Nicaragua, a 173-mile route linking the Atlantic and Pacific, using Lake Nicaragua as a natural shortcut. This location isn't new, it's been eyed for centuries, even before Panama was chosen. Lake Nicaragua offers a ready-made waterway, reducing excavation and costs. Just north of Panama, the canal would directly compete for the same shipping traffic, breaking Panama's monopoly. For shipping companies, more options mean lower tolls and better deals. Nicaragua's government, led by President Ortega, granted a 100-year concession to the Chinese-backed company, betting on jobs and prosperity. But the route cuts through sensitive rainforests and wetlands, threatening rare species and the country's largest freshwater source. Environmentalists warn of irreversible damage to Lake Nicaragua and the displacement of thousands, including indigenous communities. The project's strategic brilliance is matched by its environmental and social risks. The canal's path slices through land, lives, and nature, making its future uncertain. For Nicaragua, it's a gamble between economic transformation and ecological disaster. The world is watching to see which side wins. The Panama Canal was a triumph of engineering, connecting oceans and transforming global trade. It slashed shipping times, opened new routes, and cemented U.S. power in the 20th century. Today, it remains vital. 14,000 ships and over 5% of global trade pass through each year. Panama's recent expansion allows bigger ships, but the largest vessels still can't fit. The canal's dependence on rainfall and its status as a single choke point make it vulnerable to disruption. These weaknesses, combined with China's ambitions, have opened the door for a rival. The Panama Canal's legacy is secure, but its dominance is now under threat. The next chapter will be defined by competition, not monopoly. The Nicaraguan Canal is a key piece of China's Belt and Road Initiative, a global strategy to build infrastructure and expand influence. The BRI aims to create new trade routes and deepen China's economic ties worldwide. The canal would extend China's maritime Silk Road into the Americas, giving it a direct gateway between the Pacific and Atlantic. This isn't just about trade, it's about geopolitics. By funding critical infrastructure, China gains leverage and builds alliances. In Latin America, the canal is a tool for China to challenge U.S. influence and reshape the region's politics. The project also keeps China's construction industry busy and exports its engineering standards abroad. It's a way to sustain China's growth while advancing its global ambitions. The canal connects China's domestic needs with its international strategy. It's a multi-layered move, economic, political, and strategic. For China, the canal is both a symbol and a weapon in the contest for global power. China's canal plan has sparked excitement, skepticism, and alarm worldwide. Nicaragua's government sees it as a path out of poverty, promising jobs and investment. The U.S. views it as a challenge to its influence, raising concerns about transparency and potential military use. Environmentalists warn of ecological disaster, especially the threat to Lake Nicaragua's freshwater and unique wildlife. Protests and international scrutiny have put pressure on the project's backers. Shipping companies are intrigued by the prospect of lower costs, but many doubt the canal's financial viability. The $50 billion price tag and uncertain demand make investors wary. The project's future hangs in the balance, caught between ambition and risk. The world is divided, hopeful, cautious, and watching closely. If built, the Nicaraguan canal could reshape global shipping. It would accommodate the world's largest ships, offering a shortcut between Asia and the U.S. East Coast. This could make shipping faster and cheaper, redrawing trade maps and boosting efficiency. Competition between two canals would likely lower tolls, saving billions for shippers and consumers. U.S. East and Gulf Coast ports could see a surge in traffic, while West Coast ports might lose ground. The economic geography of the Americas could shift, creating new winners and losers. The canal could also offer an alternative route for Asia-Europe trade, adding resilience if the Suez Canal is disrupted. For global trade, a second canal means more flexibility and security. The impact would ripple far beyond Central America, affecting supply chains worldwide. But the project's success is far from certain. The promise is huge, but so are the risks. The world waits to see if this bold vision becomes reality. A Chinese-backed rival is Panama's biggest challenge in a century. The canal is Panama's economic lifeblood, but a competitor could slash revenues and force tough choices. Panama is fighting back, expanding its canal, modernizing operations, and leveraging its experience. It has a head start and a reputation for reliability, but must innovate to stay ahead. The Nicaraguan canal faces huge obstacles, massive costs, engineering challenges, and fierce environmental opposition. Securing funding and overcoming local resistance could take years, or derail the project entirely. As of now, construction has barely begun. The future could play out in three ways. Nicaragua fails and Panama remains dominant. Both canals compete, lowering costs but hurting Panama, or they coexist, serving different markets. Whatever happens, China's proposal has already changed the game. The strategic importance of these waterways is clearer than ever. The fate of the two canals will reveal the new balance of global power. The world is watching as the next chapter in trade and influence unfolds. The stakes have never been higher.